And welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I'm going to give an update on my portfolio by sharing the latest purchase, showing you the dividends, and of course the portfolio value. And then at the end, I'm going to show two very useful web pages which you can use when you're doing your own due diligence for stocks that you potentially want to add into your portfolio. So before we take a closer look at my portfolio, the first thing that I want to share is a Danish news article where it is stated that the Danish C25 index has lost more than 9% over the last 13 trading days, and they are questioning whether or not we are going to have a stock crisis in Denmark. Well, I would simply just say, if you look to the valuation of the Danish stocks, they were really highly valued. So this just goes to show, even though it is wonderful businesses, if they are too highly valued, then you run a severe risk of people not being willing to pay that premium if you invest on those high levels. So this just once again confirms my thesis saying earnings determine price in the long run. So if you're paying too much for the earnings of the companies, sooner or later they will go out of favor and the stock will lose a lot of value. So what I'm trying to do and what I'm trying to show in this portfolio is try to invest in wonderful businesses if I can find them at a fair price, and even better if I can find them at a little discount, meaning that currently they are perhaps not too popular, but hopefully in the future they will become popular again when people actually start to look at the fundamentals of the business. And just to be clear here, when I say it is my thesis, well, that's actually stretching it a bit, since this is something that Benjamin Graham taught more than 70 years ago, and what Warren Buffett has been applying very successfully for the last 55 years. You could of course also say, well, just take a look at One Up on Wall Street by Peter Lynch and see where he's talking about going to a cocktail party and talking about stocks. If people want to listen to the stock you're talking about, then it is probably because it's already a hype stock that a lot of people want to talk about. But if you then all of a sudden change the topic to a stock which is currently really unloved, it could be in the garbage business or something which is really not that sexy to most people, then they are probably losing interest rather quickly. But if it is in a business which is currently not loved by the public, perhaps there actually is a lot of money to be made there. At least that is one thesis that Peter Lynch, for instance, had applied very successfully. So this was just to give you a couple of examples from two highly successful investors and why I take a particular pride in investing in currently unloved businesses as long as the fundamentals checks out, because in the long run I truly believe that earnings determine prices, and sooner or later someone else will realize, oh, that is a tremendous business to be invested in, perhaps I should invest in that as well. And what happens when a lot of people do that? Well, that will drive up the stock price, and if that stock at some point is loved too much, so people are willing to pay too high of a premium, well, then you should sell out. If we then turn to the portfolio and see how it has performed within this week, well, the first thing we notice is that there's a green circle for this week's episode, meaning that the portfolio is up in value compared to last week. If we go to the portfolio values tab, we can see that the portfolio has increased by $1,100 and that we are getting closer and closer to break even. And within this week, at some point I was actually above, but due to the downturn we saw on Thursday and Friday, I ended up with a gain of $1,100 compared to last week. If we then go back to the overview here, you can see that the portfolio pie chart here has also changed quite significantly since I have added more stocks into one particular holding in the real estate piece of the portfolio. So let's take a closer look at that as well. So if we scroll up here just to get a better overview and then perhaps zoom in a bit, so just to make it even more clear here, then you can see that my position in STOR capital has increased quite dramatically, and currently it is making up more than 15% of my overall portfolio. So I invested a little less than $10,000 into STOR Capital, which is the equivalent of 301 shares. Unfortunately for me, it has actually dropped a little more in value since I have invested in it, but due to my conviction of this stock, I wanted to make up a larger percent of my portfolio, despite the fact that it is currently not trading at a particular discount. I would say it's probably trading quite close to fair value, but I simply just wanted it to make up a larger percentage of my portfolio, and since I'm not paying a premium for it, I thought it was fair. If you want to know more about STOR Capital, I highly suggest that you go and read this article on Seeking Alpha. It is currently freely available. It is written by the CEO of STOR Capital, namely Christopher Volk. I mean, this guy is everything that I could wish for in a CEO, and I am happy to put my money to work in a company which he is managing. I know that I skipped a lot with STOR Capital here, but if I actually have to explain the entire business model, that will require a video of its own. So please let me know in the comment sections down below if you would actually like me to try and explain why I think this company is so magnificent. Please let me know. In the meantime, let's continue with my favorites tab, namely the Dividends tab. Because within this week I have received a little more than $20, since I received a little more than $11 from LTC Properties and a little more than $9 from Wells Fargo. And while we're on the topic of dividends, let me share this positive news which I have received from General Dynamics, namely that they will be increasing their dividend by 8.2% from $1.10 every quarter to $1.19 every quarter. And just to illustrate why I think this is really positive news, since I have a little more than 40 stocks in my portfolio of General Dynamics, you can see that my yearly income was $176. After that increase, then my income is $190. Then after withholding tax, that means that I'm getting close to $13 more every single year just by holding this stock. This is why I truly love dividend growth investing, because if I, for instance, hold this stock for 20 years and they increase the dividend by 5% every year for the next 20 years, that will be truly astonishing returns I would get for my initial investment. So let me try and illustrate that point even more clearly. So currently I have bought for $6,504, and with the yearly income which I'm receiving now, that gives me a yield of 2.93%. But if General Dynamics keeps increasing their dividend with 5% every single year for 20 years in a row, then you can see how the dividend payment will surely grow. And in 20 years from now, that will give me an estimated annual income of $530, or the equivalent of a return of 8% every single year on my original investment. This is of course if you keep the investment for 20 years. So this is why I truly believe that you need to find wonderful businesses to invest in, because if you all of a sudden get an 8% return just by holding the company, well, why should you then be tempted to sell? And before anyone says, well, 5%, you cannot assume 5% dividend increase every single year. Well, let me show you what you can see on Seeking Alpha for General Dynamics. So if you go and look up General Dynamics, go to the Dividend Growth tab, then you can see over the last 10 years, the compounded annual growth rate has actually been close to 10%. And that makes a huge difference once it comes to the dividend. So I just put in a conservative number of 5% increase every year. And once again, just to illustrate the point here, I mean, instead of my conservative 5%, let's try and set it to 8%, which is closer to what we have seen this year. Well, then 20 years from now, my annual return on my initial investment would be more than 14% a year in dividends alone, every single year, as long as the business keeps on doing well. That is truly astonishing returns. But I mean, that is also 20 years from now. Who knows what will happen? So let me continue by showing you two very good web pages to use when you do your due diligence. The first one is called Open Insider. Here you can look up a ticker code and then you can see what the insiders has been buying. And if we take a look at STOR Capital, we can see here that Christopher Volk actually bought STOR Capital back in March last year, the 10th of March before the crash, and he paid a little more than $30 per share. That is why I actually feel quite confident by buying at the current level, because I'm not paying too much of a premium compared to the CEO. Of course, you could see here, if you go a little further, that he actually managed to sneak up a large purchase here on the 14th of May, where he paid 17.64 per share, and he actually bought 5,650 more. So I think this webpage is actually quite useful. You can of course also see all the other insiders who are buying, and if there's a lot of insiders buying a company, that is a strong conviction for me to at least investigate the company further. I mean, there's no one on earth who knows more about this company than the insiders. So insider purchases can be quite a useful metric to use if you want to see how a company is expected to perform in the future. If we then go to the second web page, which I actually think is quite useful as well, then it's called Whale Wisdom, simply saying what are the whales doing, what are the big guys doing in the market. If we go and take a closer look at STOR Capital, then we can see the biggest holders are Vanguard, BlackRock, and Berkshire Hathaway. So it is always very interesting to see who are actually the biggest shareholders of these companies, especially if there are some fund managers which you are particularly impressed about. For instance, I pay close attention to what Warren Buffett does, because I truly believe that he has done a tremendous job over the last 55 years. So when I'm seeing that he holds close to 10% of the entire company, that is quite a useful information to me, at least. I will of course share a link in the description below for both of these web pages, so you can go and check them out yourself. Unfortunately, insider buying is only used, or can only be used, for US companies. So that actually sums it up for yet another exciting week of the Lazy Money Game. So please let me know in the comments down below if you think that you can use these two web pages, Open Insider and Whale Wisdom, for anything useful. I was at least quite happy to discover them, and hence I felt the need to share it with the community. And until I see you next Sunday, bye!